Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit cryptocurrency, businesses, primary homes, real estate, save a failed 1031 exchange, so that you can create and preserve more wealth or help your clients, friends, and family do the same. Hey, I'm your host, Brett Swarts. In each episode, I am joined by some of the best real estate, financial, crypto, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming on expertcresecrets.com. Where we're training and coaching and helping commercial real estate brokers, M&A advisors, luxury agents grow their business. I'm excited about our next guest. He is the founder and CEO of Quantum RE, which is making home equity accessible, investable, and tradable. In fact, he's on a mission to help others have freedom with their equity through a groundbreaking, patent-pending real estate investment and finance platform that has been designed to give homeowners and investors unprecedented access to the equity in single-family homes. He wants to help you solve problems, which as a homeowner, if you have a lot of equity and you're looking to access the equity to create and preserve more wealth, Matthew Sullivan is your guy. Hey, Matthew, welcome to the show. How you doing?
Very well, Brett. Thank you for having me on.
Absolutely. For our listeners getting to know you for the first time, could you give us a little bit more about your focus and a little bit more about your story?
Yes. So in reverse order. So I'm an entrepreneur. I think one is, I'm not sure if you're born an entrepreneur or if it's circumstances that make it, but I've been really building and running my own businesses for almost 30 years now. So I moved to the US about 8 years ago, landed in Southern California, moved to just north of Salt Lake City a couple of years ago. One of the first things I did when I moved here was to set up a crowdfunding company that focused on real estate, really just hot on the tails of the Jobs Act, which was the first time that you could raise capital on online platforms to people that you didn't have a previous relationship with. So, and really, Quantum RE today is a company that we set up 4 years ago. And as Brett, you were saying, what we focus on is really helping homeowners access the equity that is in their home without having to take on more debt. So we have a financial tool that is equity-based that enables homeowners to unlock up to $500,000 of the equity in their homes without having to borrow money, without having to take out another mortgage. And what that means is there's no debt, there's no monthly payments, and they can use the capital for any purpose.
I'm so excited to jump into this. This is so timely in so many ways. But before we go into that, Matthew, I want myself and also for our listeners to get to know you a little bit more. See, I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. Some people call them strengths. Some people call them superpowers. I'm curious, what are those one or two gifts that you believe you were given, and how does that help how you help and bless people today?
Well, I suppose really, that's one of those questions which is always very difficult to answer because one always feels it's the sort of thing that other people should be answering for you. But I suppose the thing that I'm probably best at is creating solutions or integrating or synthesizing solutions. So in other words, my background is financial, finance-based, technology-based, and really what I'm I wouldn't say I hate to say I'm good at it, but what seems to have been most successful for me over the years is really combining this concept of financial platforms, availability, systems, processes, and creating the machinery to enable people to do things for themselves that otherwise they wouldn't have been able to do. So I'm not sure if that answers your question, but it's always a very difficult question to answer. Really.
It absolutely does.
And one last thing, I do cook a mean Indian curry. I'm not sure if that, which I'm actually quite excited about at the moment. I've got one sort of bubbling away in the slow cooker right now. So, it is something that's, this evening should be quite good.
No, I love that. That's a great gift to have for the family and for everyone else too. And I heard the saying that we don't rise to the level of the aspirations of our goals. we actually fall to the levels of our systems, right? And our processes and our procedures. And I love the way you put that, creating solutions, integrating solutions, and then combining financial platforms to be able to solve problems in a systematic way. I think that's wonderful. And that's perfect for our next part of this, of how to get equity freedom in your home. So Matt, can you take us like kind of step by step through this process? What's the number one secret of the first step to unlocking this equity freedom in your home?
Well, first of all, let's talk about the problem that we solve. So let's put the discussion in that context. And the problem has become particularly relevant over the last 18 months or so, as we see huge house price appreciation. So the problem is, if you are a homeowner and you have significant equity in your home, the only way that you can access that equity is to borrow money. And that means you can only access what is probably your largest source of wealth by going deeper into debt. Now, that's okay if you have the cash flow to support that additional debt, but it's a problem for you if you cannot borrow money. Now, you may not be able to borrow money because you may not simply meet the bank's requirements. You may not have the credit score, you may not have the income, or you may not want to borrow more money. You may not want that exposure. So if you're sitting on potentially hundreds of thousands of dollars of equity, and I think more than 18 million homes in the US are equity rich in the sense that the homeowner owns more than 50% of the equity in the property. So, if you want to do that, your only option other than a home equity agreement, which is the agreements that we create, is to borrow money. Now, a home equity agreement really uses commercial funding processes in a residential environment. So what I mean by that is that if you are a commercial real estate developer, there are a number of funding tools at your disposal. There's all sorts of different types of debt. You can borrow money as senior debt or as junior debt. There's mezzanine finance. And there's also different forms of equity. So you can have preferred equity, or you can have equity that's part of a shared appreciation mortgage. So as a commercial operator, you have all sorts of funding mechanisms at your disposal. As a residential homeowner, the only financial mechanisms you have really are all debt-based. So different flavors of debt: a mortgage, a reverse mortgage, a home equity line of credit. That's pretty much it. So what a home equity agreement is, it's a mechanism, or it's a financial tool that enables you to access your home equity without borrowing money. And the way that works is we have investors who share in the appreciation of your home. So they get paid by taking a percentage of the amount that your home goes up in value, rather than taking interest or having a payment via interest on a loan. So I'll pause there, yes, and see if that answers your question.
Yeah, I think it does, and make sure I gather that too. So first of all, the problem is that there's a lot of folks who either want to access the funds, but don't necessarily want to take on more debt, and/or they don't have the ability to access the funds because perhaps their credit score or wherever they're at, the cash flow needs just aren't there, right? And they're just not. It's just too much for them. And there's about 18 million homes. I think you said sitting on 50% or more equity. I think that was the stat.
Absolutely right. Yep.
It's just staggering as well. And then what this home equity agreement kind of solves or bridges the gaps is it gives investors an opportunity to take an equity position in your house, and then in exchange you can get are you getting cashed out?
Yes,
are you having to pay? Is it subject to capital gains tax? Kind of give me that.
Well, again, that's where it becomes quite interesting, I think, because the capital that you get, which is up to $500,000 of cash, is tax deferred. So what that means is, because it's an agreement that settles at some point in the future, there is no immediate tax implication. And again, the caveat is, we're not accountants, we're not lawyers, so do your own research on this. But what it really means is that the capital that you get can be offset, or the cost of the capital can be offset against a potential future capital gains tax liability. So in other words, if we were to invest, say, $200,000 in your home in exchange for the right to participate in some of the appreciation when you sell it. When you sell your home, you would typically give us back the investment together with a share of the appreciation. And that share of the appreciation, that cost of capital, can be offset against your possible capital gains tax liability.
Okay, I think I followed that pretty good. So I guess let's talk about the deal itself. So let's just do an example. Bought my house for $380,000 like 5 years ago. The one down the street just sold for 750. It's
There you
kind of
are. Yeah.
wild to think
Yes.
about. We owe about, I think, around 300 right now.
Yeah.
And so let's say that's the scenario. Let's just use those numbers roughly. And let's say I wanted or needed 200,000. I'm like, hey, I'm not financeable, and I don't want to refinance, and so I want to do the deal. And so and by the way, you can learn more about Matthew Sullivan and the team at quantmre.com. That's quantmre.com, QUANTMRE.com. You guys would come in and say, okay, first of all, let's assess. Is it 745? I guess A, who's paying for the appraisal, right? To figure that out.
Yeah.
B, let's say 200,000 is the number, right?
Yeah.
What percentage of ownership are you taking for the property?
So first of all, there's no out-of-pocket expenses for you. So we would pay for the appraisal. We would take all of the risk of the contract. Those costs come out of the amount that we invest ultimately. So the homeowner pays for that, but we pay for that capital up front. So you as a homeowner don't have any initial expenses or initial risk. So the first step really is to find out if you have enough equity for us to be able to pre-qualify your home. And there are certain numbers that we need to look at. First of all, if you look at your existing debt and the amount that we want to invest, if you add those two together, then normally that must not be more than 80% of the current value of your home. So in your case, you're looking at about $650,000 off the top of my head would be that figure. So if you look at the amount that we're going to invest, add that to your existing mortgage, you're below that figure. So that works for us. The next question is, how much do you want us to invest? So we won't invest more than around 30%. And again, it depends on underwriting. So if you want 200,000, that's less than 30% of the current value of your home. So that would work. All of this we can figure out without having to do any credit checks, or we can do all of this at an early stage based on publicly available information. So the next step then really is to find out whether or not what program you want to look at. So we have 10-year agreements, and we also have agreements that run up to 30 years. So if I give you an example of a 10-year agreement, that is where we would invest. If you want us to invest, may I use round numbers, 20% of the value of your home, which is $150,000. The same sort of ratio works if you want more. So if we wanted to invest 20%, we would write you a check for $150,000 less a 3% initial fee, which is the only fee that you would pay, and we'd also take out the direct cost of the appraisal and title fees. Now, in exchange for that, you would agree that when you sell your property, or if you agree to buy back the agreement, then you would pay us 33% of the value of your property at that time. So if your property goes down in value, then we would still only get 33% of the value of your property then. So if it goes down to, $350,000 for whatever reason, then we potentially might be looking at a loss. And that's the real difference between a loan and this type of equity-based agreement. So you get your $150,000 and $200,000. The amount, the sharing amount would be higher, but I don't have the mathematical acumen to be able to do that off the top of my head, and I can't find the calculator on my computer right now. So those are round numbers, but over that 10-year period, there are no monthly payments because it's not a loan. We wait until you sell your home, or at the end of that 10-year period, you may decide to either extend it, to renew the agreement, or you may agree to buy us out by refinancing your property. Because the way things are going, your property will be worth even more than that.
Got it. Okay, awesome. Wow, thank you for that. That was very detailed, and I love how you use those numbers. And for our listeners, you can rewind back to get some of those numbers. But I think the macro view is you're taking an equity position in let's say my house or anyone's house, as long as the LTVs match and the equity's there and such. And on my side of things, it's hey, when I sell, I'll pay it back plus at the and you could participate in the upside, right? Because that's indeed
Yeah,
what
I
you're
mean, effectively, what happens is
yeah.
the agreement is deferred for 10 years, so there are no monthly payments. And what happens is when you sell your property, a percentage of that sales value settles our agreement in total. So you don't pay it back. You don't pay 33% on top of the 150,000. That 33% settles everything that you owe us.
Got it.
And one other important point is
Hmm.
we do not go on title as owners. So
Hmm.
there's no transfer of ownership, and I think that's really important for a number of reasons. I think most people know, why that's important. So we're not going to come knocking on your door, hoping to, sleep in your spare room. We don't have any
Mhm.
rights over your property.
Okay.
There's no transfer of ownership,
Mhm.
so it doesn't trigger any capital gains tax. It doesn't trigger any
Mhm.
due on sale clauses on a mortgage. But the agreement itself is protected by what is very similar to a trust deed. So there is a lien on title. We
Mhm.
sit in a junior position to the existing lenders. So that just means that our position is protected when you go through the sales process.
Mhm. Yeah, it makes sense. And so, who is this not for, right? So if someone's coming to you and they're like, could you just say like it's not for if you got this and this, it's not for you, right? And then quickly, I think we kind of clarified who it is for, but I just want to make sure we clarify who it's not for.
Well, again, first of all, do you qualify? So there's a very simple guide. There's some numbers. If you've got too much debt, it's not going to work because there's not enough equity. The other thing is really these are programs that can work in conjunction with loans. So a loan or a mortgage and a home equity agreement can both coexist, and in most cases they do. So they're not mutually exclusive. Where we have most most sort of objections, as it were, is really if people don't want to share in some of the potential future value. So people are wedded to this concept of equity being something that you must not touch, and I think that's something that is changing as as the equity begins to grow, and people are scratching their heads. Why can't they get their hands if they're worth $1 million on paper? How come they can't pay the grocery bills? So but it's really if you don't want to share in the potential appreciation, or you really don't like the idea of tapping into your equity, then these types of programs are not suited to you. We do have people that compare the price. It is more expensive, or can be more expensive than a loan. So if you can borrow money, and you don't mind the monthly payments and the risks associated with that, then that may be a better solution. So as you rightly say, this is not a panacea. It's not a solution for all customers, but it is really helpful if you want to unlock a big lump sum of capital, but without all of the issues associated with debt and borrowing and
Yeah.
monthly payments.
Yeah, the interest rates are so low, but banks make right now it's like do triple backflips. Or I pictured the person who's doing
Absolutely.
they're doing the gymnastics and they're running. You're running and you got to like jump and you got to do all these flips and you got to like land perfect. And it just takes it can take a long time to get loans. And I remember
Yes.
just going through the whole loan process and I have great credit and it's just like it just can be daunting, right? So
Yes.
especially if you want to access capital to get into investments, how
Yep.
quickly can your team, Matthew, execute? And by the way, you can learn more about this at quantmre.com. That's quantmre.com. How quickly does it take? Give us the timeline on a deal.
Average duration beginning to end is 4 weeks, and that's if everything runs smoothly. Occasionally it'll be longer than that. Sometimes if we have to send an appraiser out, then it takes a little bit of time to get the documentation back from the appraisal company, particularly right now because they're very busy. Also, sometimes it takes longer than normal to get information back from cities. Again, that's sort of like a post-COVID effect. But normally, I'd say if it's a straightforward operation, it's much lighter
Yeah.
underwriting than a bank. Typically 4 weeks. which tends to go pretty quickly.
Perfect. So let's transition to the capital gains tax portion of the show. A lot of our clients, friends, and family, before they meet us, they struggle with capital gains tax on the sale of cryptocurrency, businesses, real estate, primary homes, partly because the 1031 exchange doesn't qualify for the majority of those assets. So I'm curious, what's been the biggest frustration with that you've experienced, maybe for your clients, yourself, or friends or family, when it comes to capital gains tax deferral and or the 1031 exchange?
Well, I think it's really just understanding, where the 1031 exchange begins and ends. In other words, um, if you look at a real estate investment that you might have through an indirect ownership in a property, it might be through shares in an LLC that owns the property. So it's just the complexity of the 1031 exchange regulations, and really just understanding what can and cannot be used, because most real estate structures use entities that may not qualify. So I think the biggest, it's like a gift that sounds incredible, that is incredibly useful and incredibly tax efficient. But it's just finding that single source of knowledge or understanding that can guide people through what they need to do, particularly when they're structuring their deals in the first place, to avoid potential banana skins when they come to try and liquidate their investments.
Yeah, very well said. And that's part of why we started Capital Gains Tax Solutions, to give clarity on the options, opportunity zones, CRTs, 1031 exchanges, Delaware Statutory Trust, and of course our favorite, the Deferred Sales Trust, and also to give people time and energy to be able to invest at optimal timing, right? Part of what you're doing is freedom for people in their home equity. Part of what we want to do is give freedom for people when they go to sell that high-end primary home, that luxury real estate, that cryptocurrency deal, unlock the capital through the tax deferral, through the deferred sales trust, to go start their next venture or buy their next investment property. Can't go into a primary home, but it can help. We just did a Bitcoin case for 5 million, and she had purchased Bitcoin for 50,000 and went to 50 million, and she never sold, and she wasn't going to sell until she met us, and also had a good outcome for being able to invest into a business. So she transferred the 5 million to a deferred sales trust, and then they went to cash, and now she's funding her next business venture, all tax deferred. And people can learn more about that at capitalgainstaxsolutions.com. But I'm curious, have you heard of the deferred sales trust before? What are your thoughts on?
Well, no, again, that's something that heard of it, but it's like many of these entities. I think our platform, funnily enough, has been designed to enable investors to buy fractions of these home equity agreements. So you talk about cryptocurrency, our platform, which we should be launching sometime early next year, from an investor's perspective, allows you to buy, or will allow you to buy, tokenized fractions of these home equity agreements. So we're now looking at different structures that we can introduce our clients to, or our investors to. So deferred sales trust is one of those things that we've heard of, but really haven't done any great research on it. So it's definitely something that, however, having said that, the moment this interview ends, I can tell you exactly where I'm going to be going, and that is to find out more about how they work, because it sounds like a really useful structure.
Yeah, I appreciate that. And by the way, people can also go to capitalgainstaxsolutions.com to learn about that, but they can also join our mastermind. We have a free, no-cost mastermind. We call it the DST Cryptocurrency Mastermind, every Friday at 10 a.m. Pacific, 1 p.m. Eastern time. That's 10 a.m. Pacific, 1 p.m. Eastern time. We bring on clients. We bring on people learning for the first time, financial advisors, cryptocurrency influencers, commercial real estate experts, and we're just trying to make everything simple when it comes to the deferred sales trust, so that you can unlock that capital, sell that deal, and do what the things that you want to be doing with your wealth, whether it be starting a business and investing at optimal timing. So you can go to capitalgainstaxsolutions.com. That being said, Matthew, are you ready for the lightning round?
Well, I hope so.
Knowing what you know now, if you can go back to your 25-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
I think really just find something that you like and focus on it. I think one of the biggest, I wouldn't say regrets, but one of the things that people tend to do is just move from one thing to another without any clear strategy or game plan. And I think it's relatively easy to instill that in people and say, look, if you're doing something, try and figure out what your long-term objective is. Where do you want to be at a certain point? And that would sort of avoid drifting, as it were, or the sort of shiny new object scenario. So I don't think I've been, terribly guilty of that. But I think I could have certainly, many situations where if you become a subject matter expert, if you just find something that you love and just stick at it and get better and better at it, you then become the de facto, source of expertise, and that's really valuable.
Very well said. So much wisdom. Thank you for sharing that. Second question, what's the number one book you've recommended or gifted the most in the past year?
Well, again, it's an old favorite. It's Getting Things Done by David Allen. And it's a book that I read years ago. I didn't read it, you sort of skim through the bits. But it's just so relevant. It's so useful. It's not psychobabble. It's information that allows you to declutter your mind almost instantly. And you read it and you go, for goodness sake, why did I not find this book 25 years ago when, every Sunday night at 4 a.m, you'd wake up trying to figure out what you're going to do for the following week. So it's a really useful book. And it's the one that I reread over and over again. And it's still, it still delights me with the usefulness of the information.
Excellent. I'm going to buy it today. I don't think I've heard of it and never bought it. Now you got me inspired. So question 3, what are you most curious about right now?
I'm just trying to figure out how to get my US helicopter license, because I'm a UK. I've been flying helicopters in the UK for quite a while, private pilot, and I haven't flown much since I've been over here. So I'm now very curious about how all that sort of stuff works, which is actually quite exciting because it's quite daunting to try and figure out how to navigate one's way through the FAA and all of the licensing regulations here. But it does still fill me with that sort of joy of exploration.
Fantastic. And our last question is this, Matthew. After all your success, helping the people you've helped, creating the companies you've created, and helping people unlock capital in their homes and everything else that you're doing, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
Well, I have far too many children, ranging from 2 years old to 28 years old. So I don't really have a great deal of time to sort of sit back and think about things because there's too much going on. And I think really, if I can just avoid being a completely awful father and possibly leave them with something useful, then that's all one can really hope for, actually.
And that's beautiful, Matthew. I want to thank you for being on the show. I want to encourage you to keep using the gifts and talents you've been given to create solutions, integrate solutions, and then combine that with financial platforms to unlock freedom for homeowners and the future of the cryptocurrency tokenized equity positions, which when you launch that, please come back on the show if you can and share that. And we're really, really focused on serving the cryptocurrency world and helping people get freedom and options with all things cryptocurrency. And so with that being said, for our listeners who want to connect with you, would you remind them one last time what's the best place for them to find you?
Sure. Everything's on our website. So it's quantumre.com, QUANTMRE.com. We have a calculator there where you can find out how much home equity you could possibly unlock. We've got a free book that you can download, a free guide to home equity agreements. We have all sorts of videos and podcasts and other information that should give you a very good background and information about how we can potentially help you. And finally, there's a phone number at the bottom which connects to human beings who would be delighted to help you.
Beautiful. Thanks, Matt, for being on the show. I also want to thank our listeners for listening to the episode of the Capital Gains Tax Solutions podcast. Hey, as always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit highly appreciated cryptocurrency, businesses, real estate, save a failed 1031 exchange, all so you can create and preserve more wealth or help your clients do the same. Please go to capitalgainstaxsolutions.com. We have a free ebook as well there, how to sell your business or real estate or cryptocurrency smarter. You can sign up for the free mastermind. You can get so many other resources there. We have our YouTube channel, of course. We're streaming this there right now. Facebook, Twitter, all of those cool things. And we so appreciate everyone out there. Also, if you're checking this out on Expert CRE Secrets, we appreciate you there as well. Please rate, review, subscribe, and please share this with someone who could help today and inspire. We appreciate you, and we hope to talk to you in